discuss Vodacom first. So this one, of course, is majority owned by Vodafone. The reason I wanted to bring it up, of course, is because it's got operations here in South Africa, also Tanzania, the DRC, Lesotho, and Mozambique, and more recently Kenya. So they're taking effectively a 35% stake in Safaricom, which is a business deal with Vodafone, its parent. This is exciting, though, because it means that they'll have access to that market, which is a much higher GDP per capita than some of those others. Market cap, 315.3 billion rand. It's done tremendously well recently. We'll look at the share chart in a moment. Price to earnings ratio has risen as the share price has risen to just above 20. The dividend yield is depressed slightly, but is still a pretty juicy 4.47%. Let's go to the share chart first. 5-year chart. Looking good, but in the recent times has done even better. Nice, huh?
Yeah, ever since the Safaricom deal you mentioned was announced, which, by the way, now has been concluded effectively, you know, it looks like it's just brought investor interest back in it. It languished in the 140, 160 mark for quite some time, but seems to have, you know, found something to spur its growth. You know, Vodacom is a very good example. They needed to do an Africa strategy because they basically were a South African business with a little bit of African exposure. And the South African market, in telecoms anyway, was very mature. You know, MTN was benefited because they went into Africa a long time ago and enjoyed a lot of the growth there. But the criticism with Vodacom has always been there hasn't been Africa strategy.
And that the countries they were in have a very low GDP per capita, so it's tough to build a really juicy business in Mozambique or Lesotho because the number of potential customers and the average revenues per user not so great.
Yeah.
Okay, but now Kenya is exciting. There's an election happening right now in Kenya. We know that 2 elections ago, Kenya was basically on fire for 3 weeks because of wrangling over the results. So that's a concern. You know, we might just have concluded the deal ahead of what could be a period of instability for Kenya. What do you think?
Listen, I think you should always factor in some sort of political instability. But if you take a long-term view, and you know, these things tend to iron themselves out generally. If you do take a long-term view, there's a lot of factors about the Kenyan telecom market that Vodacom can learn from, particularly on things like mobile money, you know, which
that's true. Huge success,
and financial services. I mean, Vodacom's involved in both, but significantly not getting the penetration that they can, for example, in South Africa. And maybe there's a few things from Safaricom that they can learn and import that technology here.
Because that M-Pesa thing started off being a trial project which Vodacom ran on servers out of Germany. Then it internalized it into Kenya. And it's been astonishing because it gets used to do value exchanges, bill paying, remittances, movement of cash from urban to rural areas, family interchanges. It's been a huge, huge success. And as you say, though, it's more appropriate to that market. South Africa, I always thought the reason it didn't do so well here is because more people in Mzansi have their own bank accounts. Yeah. So isn't that the issue?
Well, it's also about costs, you know. I think the strategy that was employed by the mobile operators into South Africa was just not appealing from a cost perspective.
You mean the tariffs are too high?
The tariffs are too high.
Well, speaking of that, what about this issue where ICASA is now threatening with a new rule to say that your airtime can't expire? You have to, like, it has to last for longer.
Well, that just means that, you know, they'll have to be innovative as to how they get customers to spend their airtime quicker. And, you know, if there's anything that the operators are very good at, it's innovating when it comes to getting customers to use their product. The big driver is, as you mentioned, the top line, the GDP per capita. If people have more and more money to spend generally, then there's a proportion of that goes towards their telecom spend, which increases over time.
People in South Africa love chatting on the phone. I mean, it's an astonishingly strong voice business, and I think they like social media too. Vodafone has even more now of Vodacom because of the value swap with Safaricom. So is that an issue, or will we just see Vodafone wanting to manage it carefully, get its dividends? It's going to be a nice, generous dividend payer.
Yeah, I don't think they interfere too much, you know, and I think the holding is going from 65 to just under 70%. So, you know, it's not materially that much in their lives. The good thing for Vodacom, though, is that because it was a share deal, they're going to have a lot more cash. Not that they're running short of cash at the moment, but the extra cash just gives them more and more firepower to invest in infrastructure, which all their competitors in South Africa actually don't have at the moment.
Okay, so if you're one of those people that is not, worried about this short-term commodity-related slump, Vodacom would obviously be a great way to invest in a company with a long-term future on the African continent.
I think so.
Going to go hot or not?
I'm going to go hot on it, but I'm still wary about the share price. When you see a graph like that we just saw right now, you tend to think in the back of your mind that it's due for a correction.
But 20p, I think it's going to grow into those numbers, and there could be some further upside there. Okay.
Absolutely.
I'm going to join you on hot on that.